Mrs. Kristalina, it's great to have you back on the show. Let's start with the region, and specifically Egypt. You said that the IMF is very close on agreeing on a new package with Egypt. When do we expect that? What are the issues that are still pending?
Well, we are working on the fine print for the agreement, and I don't want to predict when exactly, but it is going to be relatively soon, because all the key issues for the review have been agreed as a result of a very successful 2 weeks visit of our team to Cairo. Where we have to do a bit more work is to reflect on changing circumstances. Even in the short period of time between the team leaving Washington and the team coming back to Washington, we have seen the impact of the Red Sea attacks on traffic via the Suez Canal. Now it is almost half of what it was before these attacks started. That has material impact on Egypt, because the Suez Canal normally would provide $700 million income every month. Now this income is smaller. So we are reflecting on how to adjust the program in the context of today's developments. And we are also reflecting on augmenting our program, because clearly conditions require from the fund to step up more with and for Egypt.
We have heard that the new package stands at $10 billion. Is this accurate?
I don't want to conclude on numbers, but what I can say is that the financial needs of Egypt have become bigger. But also the partners of Egypt are stepping up, not only the fund. The World Bank is engaged with us with the intention to provide significant resources. So is the European Commission. So are the Gulf countries partners of Egypt. So in the end, we will have a package in which the share of the IMF is determined appropriately to allow closing the financing gap.
And you have said that you have agreed on the important things. Does this include the adoption of Egypt of a more flexible FX regime?
Yes, it does include making the Egyptian economy more resilient, and the exchange rate, the flexibility of the exchange rate, is a buffer against shocks. I lived in a country that used to have multiple exchange rates, black market exchange rate and official exchange rate, and I can tell you it's a disaster. It doesn't work. So Egypt has to move in the direction in which it is the market that defines the exchange rate. And I want to say to the Egyptian people, it doesn't mean that if the market defines it, it is necessarily going up and up in how much the pound has to stand against foreign currencies. It may be the other way around. I find that this is a topic that the Egyptian people need to place in the context of the fight against inflation. To me, this is the number one priority for the country, because inflation has been devastating for the poorest people, but also very bad for the middle class. So when we discuss with Egypt how to go about the monetary policy of Egypt and the foreign exchange policy of Egypt, it is in the context of ultimately having price stability and inflation under wraps.
But the authorities have more acceptance towards a flexible FX regime.
Let us finish our work with the authorities. They are recognizing that there is a need to provide that buffer. The question is how we go about it. And we obviously want to go about it in a way that does not induce pain on the Egyptian people, but over time reduces pain on the Egyptian people.
Mrs. Kristalina, Egypt has been in an IMF package since 2016. And every now and then we will see another economic crisis in Egypt. What's different this time?
I think what is different is that there is a much higher understanding in Egypt and in other countries around the world that we are in a more shock-prone world, that exogenous shocks are more frequent, unexpected and painful. And therefore, building sound macroeconomic fundamentals, building strong policies as buffers against these shocks is paramount. It is easier to discuss resilience when an economy has been hit by COVID, by the Russia wars in Ukraine, and now by the conflict Gaza, Israel. We see very clearly, and Egypt sees it as well, countries with strong fundamentals, strong buffers, they sustain these shocks much better. It's like people with strong immune systems facing the COVID virus.
Let's move to Tunisia. Do you think that Tunisia can survive without an IMF program?
Look, an IMF program is an enhancement for countries, and they choose to have it on the basis of how they assess their conditions. Tunisia has benefited from an increase in tourism revenues. It has done quite well in taking advantage of this demand for travel that came after COVID. But Tunisia also faces some serious problems. Inflation is far too high. We project it for this year to be 9.8%. Growth is slower than the average in the region. We project growth for this year at 1.9%. So Tunisia needs to think whether it would be beneficial to rely on what the fund exists for, to add strength to countries. I had a very good meeting with the Prime Minister of Tunisia, and we discussed Tunisia's openness to rely on advice from the fund. He actually said to me, there are all these talks that we closed the door to the IMF in Tunisia. I want to say very clearly, the door is wide open. So we will continue to be engaged and support Tunisia. If Tunisia decides that it would be beneficial to go beyond policy advice to us, we of course would be happy to support the country.
Let's discuss the global economic outlook. Central banks are getting ready to decrease interest rates. We have seen a rather cautious stand from central bank governors lately regarding a possible decrease in interest rates. Do you think the conditions are right to do so?
We are getting there. In defense of central bankers, I would say the following. We studied the history of inflationary periods. Every time when central banks move too quickly to reduce interest rates before the war against inflation is fully won, there are very negative consequences. Then inflation returns with the vengeance. So what we see is that when we look at the risks of premature easing versus being slightly late in bringing down interest rates, we assess this to be asymmetric. The risk of premature easing is higher than the risk of being slightly behind. Now, this being said, what is best? Best is to be right on time. Not too early, not too late. Because of course, when interest rates are higher, they throw cold water on growth, and we know growth has been quite anemic in recent years.
So you're not worried about the significance of the effect of the Red Sea attacks on global inflation trends?
What we see for now is that the impact is primarily on Egypt and more broadly on the more affected regions. Globally, we do see some increase in costs of transportation, but let's remember the Suez Canal is 10% of cargo. So it is not reaching a point when this is giving impetus on inflation. But let me say this. The reason central banks are cautious is because they are worried of unexpected developments that could bring inflation up. And whether it is a combination of factors that affect transport costs. For example, we know that the Panama Canal is also affected by a drought. If there is this combination of factors and we see increase of insurance and transportation costs, and then something else happens somewhere else, then the risk obviously would be for the world economy as a whole. But let me say that with confidence, we have seen remarkable resilience of the world economy over the last year. And it is the product of responding to crises by strengthening macroeconomic fundamentals. Emerging markets are remarkable. They learned from the past that when inflation knocks on the door, you have to tighten. They tightened before advanced economies, and now we see them easing before advanced economies. So the lesson we learned is focus on fundamentals, good things would come to you.
One last question, Mrs. Kristalina. Saudi Arabia, you forecasted that the economy shrank by 1.1% last year. However, you're expecting a rebound this year. My question to you, what is your evaluation of the diversification efforts that we have seen in Saudi Arabia, especially that the growth in the non-oil sector remains strong?
Phenomenal turnaround of the economy from being highly dependent on the hydrocarbon sector to being much more dynamic in the non-hydrocarbon sectors. I have a lot of praise for how Saudi Arabia pursues Vision 2030 in diversification. We have seen tourism picking up. I actually went to Al Ula myself, and I was mesmerized by the beauty and the quality of tourism that it offers by boosting high-tech. The attractiveness to go to Saudi Arabia comes from digital infrastructure, from the dynamism overall of the economy, and last but not least, the role of women. So a piece of the puzzle, female participation in the labor market, is now put in place. And of course, that gives additional boost to the Saudi economy.
Thank you so much. Thank you for everything, for your time. Thank you.
Thank you.